Good afternoon, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures here on August 19th, bringing you some commentary in the energy market. So let's get started. Well, October crude oil prices are sliding lower here again today. Right now we're trading right down around $41 a barrel. We're off a little over $2 a barrel. On the day, though, that's about a 4.8% move lower. So percentage-wise here, certainly the market giving up a lot of ground. Nat gas is about a tick or two up on the day, trading around 274. Complex is getting beat up here a little bit. RBOB's off about 7 cents. Heat's off about 4.5 cents. So overall, much weaker tone. And still, a lot of the fundamentals still remain the same. We'll touch on a couple of them here. Obviously today we had EIA data come out. Now, traders were looking to see a possible small draw in the stockpiles of about 750,000 barrels. The last three EIA reports we've seen draws in the stockpiles. We actually saw a build of about 2.6 million barrels. So that's certainly adding to the stocks. And as we've talked about in so many of these posts, when you look at the supply side of things here, the market has been adequately supplied. When you look at, the highest stocks for this time of year, we'd have to go all the way back to around 1990. And so, in 1990, at this time of year, it was around 379 million barrels versus for this time of year here in 2015, we got about 456 million barrels here. So certainly a lot of oil out there. Now, the one thing here that has been a bright shining star in the oil market, and that's been the demand at the refinery level. When you look at the refinery capacity utilization here for several EIA reports now, going back many reports here, the demand continues to remain very strong. When you look at the capacity utilization levels, right now here for this time of year, we're running at about 95.1% versus this time last year, running at about 93.4%. So, we're seeing that demand strong. The profit margins here for the refineries are running pretty strong here. When you look at the overall RBOB stockpiles here, not nearly as much of a build as we see in the oil side of things here. So between the low oil prices and the strong demand for RBOB, refineries are making some record margins there. But yet still what we're seeing is some, overall weakness in the price action for crude oil. And that may continue. I mean, I remain cautiously bullish the market, and I've talked about that in some of these other posts here. And basically what I'm suggesting there is this, is that, I do think that we will be getting close to or near a bottom in oil. We haven't seen that yet. We've seen a couple failed attempts where the market appeared that it might start to bottom here, and we've never gotten any follow through with it. Now, the market is very oversold right now on the technical side of things, in my opinion. And if we should start to see a little bit of real positive data flow into the market here, we could be in store for a nice short covering rally. So for traders that are eyeing this market here, and you're thinking about getting on the long side of the market here, continue to watch. There are some ideas, some strategies that you could potentially play here, but you got to be cautious. Now, we did have FOMC minutes here released a little bit, and that's kind of the same old, so not really too much new news there in the fundamental side of things. It doesn't look like they're going to do anything on the rate side right now. And then, when you look at here, some of the other news there, you look at the equities market here in the U.S., that's been kind of ping-ponging back and forth here. But overall, I think a little bit of a weaker tone, and certainly the data coming out of China has been a little bit weaker. So all these things are kind of helping still weigh on that market here. But start watching here, because I do think you could be nearing, getting close to a possible bottom. So there are some ideas and some strategies that we can play. Give me a call, shoot me an email. I'd be more than happy to discuss that with you. Substantial risk and may not be suitable for all investors.